Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. We got a lot to talk about this week. It was a bit of a shift, I think, in the balance of power in some markets. We're going to talk about that. We had the Treasury. We had Scott Bessent, which is kind of doubling down, hell's bent on supporting the market, or the bond market, I guess more specifically. We had a nice rally in Bitcoin and crypto. So that was refreshing to see for the first time in a while. And we got plenty more to talk about. So let's get into it. Thanks for joining. Thanks for being here. Each and every week we are broadcasting, and we're going to kick it off with the Treasury. So the Treasury this week basically announcing or doubling down the size of the stabilization, the injection into the long end of the curve. Now, the numbers, I think, are still relatively small in the grand scheme of things, but it's certainly the message that the administration is sort of getting active here. Typically, we see things like this happen, this intervention start to happen when there's crises, kind of afoot. We don't quite see that. We obviously had a 30-year auction at the highest yields we've seen in recent memory. So they're getting ahead of it. I won't opine any further, but clearly it's a question of how does this interact with the Fed? Where's this money coming from? How much further does it go? And a long list of questions. I think, though, this started with the Japanese currency sort of invention, the coordinated effort a week or two ago that we talked about. Now we're seeing this, and what's next, right? Now, let's shift gears to some price action. This is the Nasdaq 100, and this is just a daily chart here. And I think, the message of the market, the mood of the market changed a little bit here Tuesday, Wednesday. This break of a short-term trend, the gap down that could not get filled is, inspiring from the bull side of things. I think a gap down, a break of a trend, these are all things that can happen, that do happen. I think that the fact that you couldn't get up there and fill that gap or test it or kind of bounce a little bit after it shows some weakness. We do have a gap back down here, and, the Qs never did break out. So we've got just a little bit of kind of malaise, not the most wonderful kind of follow-up week that you would have liked to see. But, look back 2-3 weeks ago, and we were down here at sub 680. So we have made progress. It's normal to give things back. We're going to talk more about that in the second half. Now, I think the other big story this week was Citadel selling 80%, according to this note here. I believe this is from CNBC's Sarah Eisen, this write-up here. But basically, Ken Griffin's Citadel that took over the book of, his name's escaping me, situational awareness, though, the hedge fund has now reduced that pretty substantially. And you can see it in the price action of most of his holdings. In fact, this is a little bit of a snapshot. I didn't grab everything, and there might be some things that aren't perfectly attributed. But if you look at the weekly performance, that's what this is the weekly performance. You can see Nebius down 20%, CoreWeave down 17%, BE down 13%. So it was a hard hit week again of just kind of heavy sliding momentum. Call it the AI trade, call it, semiconductors, hardware, neo clouds, like all that stuff, heavy again. And I think this speaks to, obviously some of that action. We had that nice bounce back when the threat of a over-leveraged actor was cleansed. And now we're kind of just retracing some. Question is, you don't want to go back to those lows. You want to put in a higher low. We're going to talk about that second half. Bitcoin. So I posted this chart on, this is StockTwits on X as well. This was Tuesday when we had the gap down, the breakdown in kind of the cues that we just looked at. Bitcoin was just hanging out. It was just, I think it was green on the day, ignoring it, complacent, kind of bumping up against this downtrend line. And this was a take notice day. As I said, I like the upside squeeze potential. This was on Tuesday, but it's in show me mode. So again, I didn't want to stick my neck out ahead of the time either. I wanted to see a bit of a breakout. And we got a breakout. This was one of the best weeks for Bitcoin in quite some time. You can insert your favorite altcoin and it's probably the same thing. We had just a huge move up. It's again a probably, hated, under-owned, left for dead kind of spot segment area of the market. I mean, there were a couple of things going on. You have obviously just macro liquidity. You've got Treasury that's coming in now and stimulating and getting involved in markets. So I think Bitcoin may be sniffing some of that out. You also have some regulatory optimism. You had a lot of the top execs of crypto companies at the White House. You had positive remarks out of Trump. You had, a handful of cocktail of things that, and I think comments that, the United States government would soon purchase, which to me still seems like an extremely low probability event. Nonetheless, we got the squeeze. Here's a 10-day rolling returns kind of going off the charts here. It's a short chart, but going back a year or two. So nice kind of breath of fresh air. We'll see if it can last for more than just a one-time squeeze. Now, momentum still struggling. We talked about Citadel selling. I posted this video on Wednesday, kind of process-oriented view into how we think about stocks and how that might help your process. I did receive a few emails saying this was very helpful, follow-up questions. I think it's an important video. I think if you're trading, again, just some of the leadership, it's tough out there right now. It's been tough for the last 2 months. It was great for many months. So again, these things ebb and flow, and we are still kind of finding our footing here. But this video is on the YouTube channel. It's only 8 minutes long when traders break. So the big story really next week and catalyst on deck is Nvidia. And the question now is, can Nvidia save the momentum trade? I think that's probably going to be it. The chart here looks like it's, I don't know, maybe cooling off, rolling over. I mean, obviously this week it was basically sell every single day. It did get a nice push off of these 190s. It's still figuring itself out. I think it's frustrating a lot of people as well, but it had its act together as of recent, and earnings are going to be front and center. Add insult to injury, Walmart disappointing here, showing growth slowdown and seeing a little bit of a hit there towards the end of the week as well. All right, so our sponsor, IBD Investors Business Daily. They've been sponsoring our show for a while now. Give them some love. We got links in the description of this show, IBD Digital and their market search charting platform. Get discounts in the description of this YouTube video. Now, performance on the week, oil, gold, big week again. But we're going to talk about that. Treasury is not too much to say. Everything else down here. Q's hit the hardest. SPY basically down and to the right. VIX sideways. Didn't really push up. This was option expiration. So, you've got potential shenanigans, to use the technical term, that could be going on here. VIX here going out at 15. Dollar has been in sell mode. So you're seeing it, Bitcoin waking up, gold, metals, these types of things all starting to work. And you're seeing the dollar roll over. 10-year treasury yield, though, getting pretty elevated. And again, this is why you have the treasury now, which is starting to step in and just monitor, I suppose, the situation. Healthcare, energy, materials, those are your best performers this week. Those were the 3 green standouts. Again, probably the under-owned stuff in this market. 52-week highs and lows, not that great. You're seeing a little bit of a dry up here. You're seeing a moderate pickup in number of stocks hitting 52-week lows. So I'd say net internals, they got weaker this week. Percentage of S&P 500 stocks above a 20 SMA. Yeah, this clearly shows it as well. Back to kind of the bottom 2 standard deviation band around 45%. We hit this level roughly in July. So again, your average stock has been in sell-off mode. So that is all we have for right now. Let's jump into the charts here in just a second. All right, we've got TC 2000 open. Let's take a look at some charts here. S&P 500, this cash settled market. So this is the picture. We got a little bit of a technical kind of short-term breakdown here. We broke below the opening August 6 lows, and looks like we're trying to make some type of measured double move here, right? Down to probably test the top end of this range, effectively test this breakout, fill any gap right in here. And, from an intermediate term perspective, frankly, healthy. What you don't want to see, of course, is the market spiral back down and, pick up in volume, expansion in range, and reject and fall back below 7,600. That would not be welcoming. That would not be a good development of price action. But if we were to say that, hey, we had a sharp move here, we went up 7% in 7 days. Now we're going to give 3% of it back. I mean, even if you tested down here, you'd be at 2.6%. Up 7, down 2.6. It's a reasonable trade-off, and you can still be in a pretty healthy uptrend. So let's see if that's kind of the way this shakes out. This is the area I'd be just watching, though, is the 7,600 zone. Again, if we start just really, accelerating down into this range, then that's a lot more concerning. Nasdaq 100, look, it never broke out. It's still in this range, and it's kind of just falling and flailing back in this general area. So Qs feels like, again, just a malaise here that wants to move sideways. We're still at the end of summertime. Nvidia earnings will certainly wake this up. So we'll see what Wednesday looks like. And then once Labor Day comes back and we start kicking off prime time here, September, as we do the home stretch to the end of the year, that's when things, I think, start to get interesting on which way the bigger picture starts to move. Russell 2000, again, not bad. Kind of checking back a little bit. Sideways. All kind of lackluster. Markets clearly lost some energy this week, but they're not looking terrible. Let me actually pull up our market environment indicators. So if we look here at what we call our market navigator, we still consider ourselves in a strong swing environment. There has not been enough technical damage. Pullbacks are mild so far. We are seeing downgrades internally. So bearish internals, sector leadership is getting a little bit weaker. Industries are getting a little more, difficult to come by. But generally speaking here, bulls still have the edge in our book, and we're going to continue to trade that way accordingly. And again, if we see persistent weakness, then we could see a flip there. So let's take a look here at a couple other markets, and then we'll look at some trade setups. We'll talk about momentum, some of the things we're doing. So I think dollar, we already hit on it at the beginning. But, you're kind of, you're continuing to roll over here. You're oversold in the short term. But basically, dollar, no matter how you want to denominate it, look at different currencies, it's been on the free fall. Gold continues to work, and we're getting the second leg up. I've posted this chart on social a few times. The first leg up went sideways, and now it's starting to move up again. Look at the dollar volume that's starting to come in here on GLD. Weekly chart, right? We broke trend. We're still accelerating up. So life looks good for the metals. It is back to life here. This is 3 weeks up in a row. You can look at silver. You get a similar situation. Pattern's a little different, but still you've got energy in the space. GDX, you're 60%, 70% of the way back towards these highs. Big follow through week up 14%. If you're looking for where the concentration and the hot money moved to, here's where, some of those spots were. We did talk about that in our past weekly videos. And XLE, again, not quite breaking out, entirely. It tried to, it briefly made new highs, then kind of settled back out. But again, momentum's dead, hardware's dead, semis are heavy, gold, metals, miners, energy, materials, healthcare, biotech, right? These are all the spots that we're seeing rotation this week and continuation. These are spots that we have talked about. There's not a whole lot new here. It's just that, they get caught off guard. You get kind of lulled into looking for the next, hot AI trade. Meanwhile, you're getting breakouts in biotech or, elsewhere. So those are some of the pockets that are still working in this environment. If we go back to our Market Navigator product and we go to industries, so this is an easy cheat code way just to pay attention to what's kind of surfacing at the top of the list. So we measure 74 of the industries and we're tracking which are the strongest. So you can see healthcare tech, software, metals and mining, real estate, healthcare equipment, biotech. So you're getting different names. It's not just hardware and devices and, down the list we go. So So yeah, that's kind of the lay of the land this week. Again, VIX was pretty muted, so it didn't really get too much of a bid this week, despite the fact that we sold off. Remember last week's episode, it was titled VIX hits new 2026 lows. We said VIX would be mean reverting. I didn't think it would be mean reverting so quickly, but it is, getting a little bit of a bounce. Obviously, we'll see what the new OPEX calendar looks like on Monday. So let's look at some of our positions, some of our trading systems. So momentum has been getting hammered. We had a little bit of a reprieve here on Friday. So S&P was up 0.41. Galahad, our longer term portfolio, was up 1%. Rockets was up 0.68%, but it got beat up all week. I mean, it's been in, kind of that situational awareness. It's got a little bit of a software tilt. It's got some other things, but generally speaking, we've been getting our butt kicked in momentum. And so we haven't, avoided it, as perfectly or as cleanly or as clearly as certainly everybody on social does. So let me show you some names. NTRA. This is a name I've talked about. This is a healthcare name or biotech. This is in our signals list. Again, it's a tougher chase here. I'm not saying go buy it at these levels, but if you're looking for relative strength, you're looking for stocks that are still extending. NTRA, it's still one of them. Again, our entry was back here. We've traded it in and out, and it's on the signals list. It's not in the portfolio. HPE. So this is a name I've talked about. This is in the portfolio. We still own it. We've suffered a good pullback here. Exit zone is down here. We entered it at 48 bucks. So this is where we've given back decent amount of open profits. We ask ourselves, what are we shooting for? What are we trying to capture? Is it a 7-day swing or is it a 7-week swing? That's going to try and get us 50% or 60 or 70%, right? So what we're optimizing on might be a little bit different than you, but for us, we're risk managing it. It's in the portfolio. It was a tough week for it, but we still want to own it, and so we still have it. HBM, this is one I have not talked about. This is in the portfolio. So this is one of the standouts. There weren't many this week that did a lot of lifting to the upside. It was mostly to the downside this week with exits. This is a materials name, metals and mining space. Again, like we talk about, hey, XME, as we talk about this as a sector or an ETF play, right? GDX, the miners, the metals, those types of things. So HBM now goes into that industry that is working, and it had a great week. And so, we're up 18% on it. We entered back here at 25.50. Exit zone's creeping up. We own it. It's in the portfolio. So again, tough chase, but it's something that we do have. Last but not least, I'll give you Hinge, HNGE. This is a relatively new signal, pretty tight, pretty, pent up here. So I like the potential. It is not in our portfolio, but it's on our signals list. So that means, again, we like it. Healthcare name, back to things that are working right now. Pent up at highs, consolidated, good relative strength. So we'll see if this can work for us. So that's it. Those are some ideas. We still have a lot of names on the list. We did take a lot of exits this week, so we reduced exposure. We reduced the signals list. Momentum getting a bit cleansed, but there's still plenty to chew from. And again, I do think one of the big catalysts, like it or not, better or worse, is going to be Nvidia next week. So that's what I got. Hopefully you made it through. Summertime's coming to an end. We get another week or so of slower trading, and then I bet things are going to pick up. Keep an eye on Bitcoin, crypto, Treasury. We'll see what kind of announcements we get there, and then we'll see if we can stick a landing here in some of these AI hardware names. I've got links in the description of the show for any of the tools, trading systems that you see in this video, and don't forget to check out our sponsor, IBD. Take care. Have a good weekend. We'll see you back here next episode.